Alrighty, good morning, everybody. It feels like it's been a year, but it's only been about a week here. Good to be back. Hopefully, you guys had a good weekend, a good week last week. Looking over at the markets, it seemed to be kind of a tricky market because price just kind of traded back and forth between a pretty tight range. But let's go ahead and take a look at the charts here. We're not going to spend a lot of time reviewing anything this morning. We'll probably just jump into our pre-market and just look at what's going on with the higher time frames. Maybe I'll just upload all of it to YouTube as well. So let's take a look. I mean, I don't think there's anything notable that really happened here last week that I'm going to talk about, outside of the fact that if we look at where price got to last week and found a lot of resistance, let's go ahead and zoom in here. It was right at this next pocket. Now, did we breach through the pocket and push up about 3 points above it? In two instances, yes. But more often than not, we were holding right around the scaffolding and right around that next major task zone that we wanted to see the bulls get through, right? So, here is last week, if you guys recall. I left here on January 19th. I don't really recall what we were talking about at the time, but we did get a little rally at the end of the week, and then we came into this last week. So 2 weeks ago, we had a little bit of a rally on that Friday, and then last week, we just kind of petered around. So it was a very messy market. I hope you guys didn't get too chopped up in there. It is what it is. You guys know that we have, more often than not, periods of consolidation, and then we have temporary pushes in one direction. Sometimes it's very unidirectional, and then you get these choppy markets. So last week, pretty choppy in there. But the key thing again that I want to point out is we had two major resistance areas above. So before I left, we were all the way down here, and we had this pocket right around our scaffolding from 60 to 63. And then right above that, we had, again, this pocket around 48.90. And then that final pocket up around 49.20 to 23 to 28 or something, right? So looking at what happened when I left, we actually, or I should say the market, not we, but the market went ahead and chugged right through the expected major resistance area, but then it pushed up and came right into the next one, and that's where we got the pullback. And interestingly enough, when we breached through this major area of resistance that we were expecting at least to be major area of resistance, when they pulled back, they came right to it and got the bounce somewhere in here. And so, no, actually, we never actually pulled back to it. We actually only got down to here. And then we got this. Oh, this is the level I was thinking of. Sorry. So we broke out through this area, right? Nothing notable about in terms of resistance. Came up to the next one. That's where it petered out. And then this was our next expected resistance around 48.90. It also was our scaffolding level. And so for a while there at the beginning of the week, we just basically held. In fact, we held nearly to the tick on multiple tests here in this little peek through. And then finally at the end of last week, we broke out right to our next pocket of expected resistance, pulled back, and then that previous major area of resistance that we were expecting then became our area of support on the pullback back on whatever that was, about Tuesday of last week or something. So we held, and now you can see for the end of last week here, let's zoom it in. I'm sorry, should have this zoomed in here. We've just been chopping back and forth from the pocket below and the pocket above, right? So we're currently in a pretty tight little chop box right now. And let's go ahead and jump up to the higher time frames. Just FYI, as you can see at the bottom here, I am on Central Standard Time. I'm actually pretty close to Chicago, which is, I guess, gives me a couple, microseconds of a better fill on my trades. So we are on Central Standard Time from here on out for a little while I'm helping my friend open his radar roofing office and everything like that. So let's take a look here. Let's go up to the monthly and let's actually just do a quick swath through everything. I haven't been here for a week. See if anything has changed from that higher perspective up there, and then we'll dial down to the short time frames. and look at the levels that we're going to want to be aware of this morning as we come into the open. So going up to the quarterly here, guys, we've been watching this for a while. The fact that we had this huge reversal candle from the last quarter coming into this quarter now, and this actually will be closing as we come into March, right? The end of February, this will be closing. So we got a lot of time for this to develop, a lot of time for things to change in terms of the potential signals we're seeing here. But the main thing that we take away from this bird's eye view up on the quarterly chart is that the bulls are really strong. We had a huge recovery at the end of last year, and now we're pushing to come up and test the all-time high with a very, very strong candle right now. So up from this, again, bird's eye view, we have very, very strong indications. We do have this potential bearish signal that could end up showing up if we were to zoom in and look at this formation here. One of those typical pops to a higher high with a lower high on the RVI. That if we start to see a much deeper pullback right now, we can basically disregard this until we start to see a pullback down through some key levels that we'll talk about this morning. But it is there. So if we start to get a larger pullback, we break through some of the key levels that we're going to talk about this morning, we might want to start to consider that, hey, we are seeing some clues for a bearish pullback. But again, outside of that little caveat, everything looks very, very strong up here on the quarterly chart. When we get to the monthly, it's the same picture. Remember, we had that beautiful bullish signal lining up, potential bullish signal, back at the end of October of last year. And that's where I told you guys, this with the monthly potential, with the weekly potential, with the daily close signal, with the 4-hour close signal, all pointing for the bulls, it looked like we might be in for a nice Halloween rally coming out of Halloween, coming into November. And sure enough, all the signals align there, and look at how big of a push we got. We got about 800 points to the upside so far. And the rally might not be over, right? So the monthly gave us strong indications back at the end of October. We called it on Halloween that we could have a huge rally given that all the signals were lining up and all the potential signals were lining up. And that's what we got. Now, on the push, again, right now, if you look at 50% of last month, we pulled back right to it, found support, and now we're breaking to new highs. So these are all really good clues for the bulls, but we also have that caveat on the monthly, just like we have on the quarterly, that there is the beginnings of what could be a bearish divergence off the high. So what does that mean? Right now, things are strong, but if price does start to come back and get through about 50% of the range of this month right now, and we start to break down through there, we're now going to want to consider, hey, monthly, quarterly, we actually also have the weekly showing potential. All these potential signals, just like the potentials we had back on Halloween, could lead to some type of pullback here, right? But again, from the bird's eye view, things look very strong. We might just start some type of pullback here. Now, breaking through critical levels in the chart will be kind of our first clue, our first check mark for that potential bearish reversal that we're getting. So if price does end up holding from some of the key levels below and we come back up, we know what to do here, right? This is just going to be probably a false or failed signal if we don't get enough follow through, and they'll just go ahead and continue to push, right? So the higher time frames, again, look very strong, but they all kind of hinting at a potential pullback right now. So that's the weekly, that's the monthly, that's the quarterly. They're all showing that same potential up there. Again, in the context of a very strong market. In the daily, we also see the same situation here where as we push to these new highs and we get close up to the all-time high at 50.33 up here, we've got clues for a pullback. Now, a couple of days ago, you guys should have recognized that we had a really good bearish reversal candlestick pattern off of the high of last week that did look like it would lead to a pullback, especially with the bearish divergence potential forming on the daily here. But as you guys saw, all throughout the week, the bears just could not get enough oomph to get through the low of that candlestick. So we never really confirmed the signal. We just saw there was potential if we could get down through the low of whatever that was, Tuesday or Wednesday of last week. So that hasn't happened. We keep chopping around right inside of the range of whatever that was. I think Wednesday of last week or Wednesday of last week. And that's where we sit right now, right? We're sitting right inside of this chop zone right now. And if we go down to our 4-hour, we have kind of one of those conflicting battle zone type of situations. So those of you who have been here a while know that when we start to get coiled up in an area with bearish and bullish signals on the 4-hour in a very tight range, that's where we're sitting and we're waiting for some type of break one way or the other. Now we have two conflicting points of view. We have the very strong market that we're currently in that could again lead to some type of breakout through last week's highs to come up into some of the levels we have above. But then we also have some really clear clues that a pullback makes sense. However, when the pullback occurred back on Wednesday, they couldn't even get through the first scaffolding level, right? So they pulled back to the scaffolding. That was our little zone around 89 to 91. That was resistance back previously that then became support here last week. So they couldn't get through there. The big question this morning is going to be who's going to win out. Trading inside of this range right here, probably a tricky situation as it has been for 3 days of last week, and now in the overnight session, still unable to really get outside of there. Another key thing to notice here this morning is on the pullback coming into our Sunday Globex session, the bulls held 50% of last week. So they came right to it. In fact, if you would have bought 50% of last week last night, you should be up about 20 points right now, give or take. Right? So a really nice, beautiful hold from there. And again, we are literally nearly 50% of the range of this total chop fest that we were in last week at the end of last week. So again, it's kind of 50-50 type of situation here, given so many high time frame potential bearish signals from the highs, and given the fact that all the high time frames are still showing to be very strong. It's going to be a question of who wins out here on either side. And that doesn't mean that if we get through the high of last week that we're guaranteed to push to the next major resistance area, because for all we know, and you guys know we talk about this pretty often, we could push up through the high of last week, peak above it, and then get a big failure or a big pullback, which again is kind of an expectation, a pullback from last week's highs, given the, again, daily, weekly, and monthly potential up there. All right, so this morning, it really, even if we didn't use signals to give us clues, it's going to be a question of who can break out either through these highs or below these lows from the chop block that we were in. All right, so let's look at some of the levels that we're going to be dealing with here this morning. On the hourly chart, I've got everything plotted out. I sent out the report this morning. I'm hoping that all the levels that we're seeing here are plotted out in our report. So you guys should have these new pockets of potential support. It just so happens that if you draw a fib for this nice impulsive move for January here, from the lows just before I left 2 weeks ago at this point, or a week and a half ago or whatever, all the way up to this week's high, we do have retracements of that leg that line up almost perfectly with the areas we would expect to see the bulls jump back in. So if we take a look here outside of this first pocket that we have plotted on here, the 38% retracement of this significant leg up happens to also be the major area of expected resistance from last week that's now become a major area of support. We also have the 50% retrace, which, let me just make sure. This level right here, you see this dash dot dot level, that was the high of the year that we were expecting to see what would happen, to see if we could break out through it. So that's just kind of a place marker there. But 50% of this leg up is also right around the scaffolding. And if you just zoom back a little bit, this area of major resistance from back at the beginning of January and the end of last year there. So coming back into that pocket, coming back down into this pocket here, which if you go to the left-hand side and zoom all the way back, major structure sitting right there. We've got those, and then the 61.8 is kind of this next little subdivision of resistance down around our scaffolding at 48.19, 48.20. Again, also just about the 61.8 retrace of that area. So those are the main pockets. Now, the first area we're going to want to see the bears get through for any faith in the potential pullback that we're looking at here this morning is going to be the same resistance that we had last week as the bulls tried to break out and found resistance right around the scaffolding here. That's now going to be very relevant for the bears this morning but if they do end up pulling back here. So if the bears can't even get through this pocket and we end up getting something like this where maybe we come in and remember, it's not necessarily always a straight line, but we come in and we get to this area. If we cannot get through it and it holds above, that is a clue. Let's bring that back here. That is a clue for potential support for that push to test last week's highs. What they do at last week's highs, who knows? Again, we could have one of those very typical peak above and fails for the deeper pullback that we are kind of anticipating, given all of the bearish potential that we see up top. So you're not guaranteed a push all the way up to the next major pocket, but getting up through the highs of last week would be a great clue. Obviously, staying above 50% of last week and, again, that first pocket are going to be good check marks for our bullish bias to the upside. On the flip side of things here, if the bears do end up getting through basically the overnight low, which was 50% of last week, they get down through that pocket around 48.90. Now we start to consider that a larger pullback, given all of those higher time frame signals, is in the books, is in the cards, is potential once we get through that first pocket. Now, given that the higher time frames and everything else is very strong, at some point we do expect the bulls to jump in. So once they get through that first pocket, that would be the first check mark for the bears. But keep in mind, a little bit deeper into the 38, a little bit deeper down into 50%, or even into the 61.8, we are not out of the weeds for the bullish bias that we're currently in, the bullish trend that we're currently in. This could just be a nice, healthy pullback, like I say pretty often, and then maybe that begins the chug to come up and get through last week's highs and get back up, get back to the high of all-time high up at 50.33-ish, right? And on the way up, let's go ahead and take a look at what's above us here this morning. If the bulls do end up continuing to push relentlessly here, we've got some major pockets of expected resistance. The first one being somewhere around our scaffolding at 49.57. It is a little bit of a large swath there, but about 49.55 to 62.63. That, my friends, if you look to the left-hand side of your charts, all the way back to when price was trading up there, going to be very important for the bulls to get through. And then we've got this swing right here, very relevant at 49.72 half. Now, everything above there also very important. These levels are highlighting the most important structure areas in the chart. So if you go back, you trace these back to when price was back up here, you see major rotations in the market right at these discrete areas in the chart. So if the bulls break out through this major pocket of expected resistance, each of these discrete areas make a lot of sense for a potential pullback if the bulls break up into there, okay? And then this is, again, the all-time high at 50.33 on the new contract here. So anything's possible once we get all the way up there. And then on the other side of things here, we already talked about some of these pockets that make the most sense for there to be a reversal on the bullish side, onto the bullish side of things if the bears jump in here. Any further down through that 61.8 area, which is our pocket about 48.14 to 19-ish, we do have individual discrete areas that make sense for support. But once we get down through this area, it looks much more like we're going to get a deeper pullback to retest the scene of the crime back at the mid-January here, where we got this nice pop, right? And it just so happens to be about a couple ticks in front of the expected support. So if you remember back to my last broadcast, we were talking about how nicely we actually were expecting support around 40 to 45 here, and they bounced about 46, 47 right in front of it, the expected area of major support. All right, so coming back into that, again, it's anyone's guess. Are we going to test it? Are we going to slice through it like a hot knife through butter? Or are we going to get a little peak below and bounce? You know, there are a number of scenarios that could play out there, but that is that pocket that makes the most sense for potential support if the bears get all the way back down to 47.40. Now that's over 100 points to the downside, maybe even 150, 160 points if my math is right here at 8 a.m. in the morning for me. But that is what we're looking at. So we've got the pockets below that make the most sense for potential rotations, with some of those more discrete individual levels where we have some support and resistance and some swings that are going to be relevant. And then up above us here, we've got a nice easy target up to 50, let's just call it 55, just in front of the scaffolding there, if we end up getting this breakout. Don't forget, we've got this major support and resistance at 40.5. So if they get through last week's highs, 40.5 is just a couple of points above. And how many times do we see the market test a level, pull back, and then test the next one and pull back, right? We see stair steps off of our levels to the upside, where they kind of step up each level, literally to the tick in some instances. And then on pullbacks, we see the market kind of step down the roadmap levels as well. So stepping up piece by piece is an expectation, and that could be what happens here if we break out through last week's high and the bears want to fake some people out. All right, so that's basically it for our pre-market this morning. We usually just go ahead and do a review from the day and a half before and spend 10-15 minutes looking at what happened, and then we get into the analysis that I just conducted. So we might be finishing a couple minutes early here this morning, but that is the gist of it right now, guys. Really strong market, obviously. Some clues for the bears right now, and we're stuck inside of this battle zone from last week's high and the low of midweek there, right off this. Again, this was our expected area of support. In fact, it basically came right to our scaffolding to the tick and kind of bounced back and forth between the two major areas here. So that's it for right now. As you can see, we do have, again, a lot of noise in here. We have some bearish clues on the hourly off of the overnight highs right now. And now we've got a potential counter signal forming off this little pullback. It's a very tight, choppy area. So again, trading inside of here this morning, just warning you guys, could be a tricky situation. So I'm more importantly waiting to see if we can get a breakout below or a breakout above. Now you guys know that there's going to be plenty of opportunities on the short time frames. So if we come back over here, again, we're holding above VWAP right now, a nice bullish clue at the moment. But we do have plenty of opportunity on the short time frames to trade in either direction, assuming that the layout is giving us clues for that direction on the short time frames, right? So I think that's basically it as we come into the open. Obviously, you guys know, hopefully at this point, holding above VWAP, holding above the close of the day before, and getting up holding above there gives us some good clues that we should get a push to the next major resistance up above at the scaffolding. So again, we can trade on shorter time frames in either direction, assuming that we have the setups showing up. And again, from the higher time frame perspective, it's hard to say who's going to win out here. So we need to see who's going to win out on the break. And that's it. I don't really have much else to add to the picture. We will be on Central Standard Time for a while, because I'll be, you don't just open a business in an office in a day or a week. So I will be up here for quite a while. So we will be on Central Standard Time from here on out, at least until the end of the year. So or the end of the summer. So that is it for now. If you guys have any questions, as always, give me a message and we can jump on a call. And we'll leave it at that for now. So I'll talk to you guys tomorrow morning, and hope you guys have a good trading morning. Take care.